Well, I want to welcome everybody to the first Connect the Dots, a virtual learning experience. This is a very laid back forum, and the whole idea behind this is our team gets together for a sales meeting or kind of a group huddle each week. And one of the ideas was, can we get some of our friends, family participants together, knowing that we field a lot of questions each week, each month, each year about EG Capital and what do we do, and also about private equity. There's a lot of questions with private equity, and thought Connect the Dots was a cool name to allow people to not have to come out for an evening and have cocktails, hors d'oeuvres, etc. We'll still do those, but this might be a great way for people to be able to ask those just on a quick Zoom call. Put at a time during a Tuesday afternoon at 3 o'clock that might be a popular time to just jump on a call. And so this is our first one. We'll see how it goes. We had, I think, about 20 people sign up for it, and so not a bad start to this. So we're excited about having you here, and I think most of you have participated with us in a project or two. And if you haven't before, I hope there's some nice learnings that take place throughout this time. So I'm going to pass it over to our president CEO, Eric Torgerson, and he's going to tell a little bit about ET Capital, how it started. And before we go there, just the way this is going to flow, we'll have about, call it, 5 to 10 minutes of us speaking about ET Capital and what we do. And we're going to leave the rest of it wide open for those of you on this call to just do a quick hand raise and ask us anything and everything you'd like to about private equity and ET Capital. So thanks again for being here. Eric.
Well, I would like to tell you a little bit about ET Capital Partners. We started this company, well, I started this company about 5 years ago, just a little over 5 years ago now. We've grown to where we have 7 people here now. And just last year, I'm down in Phoenix, Arizona right now. I get to come down here for a little while every year because my father-in-law lives down here and he's incredibly gracious. And we get to stay at his house with him. And we've been down here for a couple months for the last 2 or 3 years, I think. And fortunately, my company has grown, but unfortunately, that means I'm only going to stay down here for about 3 weeks this time, and I'm getting ready to head home already. So that's kind of sad. But since we got this, the one real thing that I saw in private equity when I went from the mortgage world into private equity was that there's nobody who really concentrates on raising capital for commercial developers, especially here in the Des Moines market. There's a lot of people who have kind of a secondary job of they know some people through their current job and they bring a client every once in a while to the partners that we have. But for the most part, nobody concentrates on this. And I saw that and I thought, I really like working with the developers. I really like working with people who are looking to make an investment. And one of the things that I really wanted to try to do is make sure that we got all of our information to as many people as possible. I like to say my dad is a socialist. And I like to say that I brought a socialist attitude to investing. I want to make sure that every person who has a net worth of over $1 million gets a chance to make as much money as the guys who have $100 million. And so that's some of what we've done here. And we'll talk about LLCs later and trying to create the largest return for our clients that we can. I came from the mortgage world before I got into the private equity world, and it was a fairly easy transition for me because I worked with a lot of very high net worth clients on their mortgages. And so I had a very good group of people already associated with me. And commercial real estate has a lot to do with value of property. And from being in the mortgage business, I know a lot about values of property. So it's been a very smooth and easy transition for me, and it's gone very well. I used to work at a huge bank called ABN AMRO, a big Dutch bank. They were one of the top 10 banks in the world. And then if anybody has seen the movie The Big Short, you can pretty much put me in there as one of those people there that looked like an idiot in the mortgage business and then realized they had to make a new life for themselves out of the mortgage business. So it's been great. You guys as clients have been great. The market has worked really well, and the Midwest commercial market is incredibly resilient in times like we've been having, and in times of great, robust growth, we're also pretty resilient to that. So we have a nice steady climb of value. And I always say there's two rates that the values here increase. It's either slowly or maybe just a little slower than that. But it's always very consistent, and it's not like the coasts where you're going to see a 40% return one year and a 5% return another year, and maybe lose 20% the year after that. We strive to have returns in the 15 to 20% range, and if it's above 20% that some partner is talking about, we really look closely at it. So I think that's enough about ET Capital and about myself. I would like to turn it over to Colby, and he'll tell you a little bit about our mission and our vision.
Perfect. Thanks, Eric. And again, thanks everybody for joining us today. We see ourselves as connectors at ET Capital Partners. Our main goal is to connect our participants with quality partners and earn solid returns for your portfolio and allow you to diversify that portfolio. And our goal is to make that as simple and seamless as possible. So we have a good team behind us that helps support us and make that as smooth as possible. So I guess in simple terms, our goal is to make you guys money. So I'm going to pass it back to Eric to introduce the team.
Thank you very much, Colby. That's one of my favorite things to say is we like to help you take your money and turn your money into more money. So next, I would like to talk about the team we have now. Many of you have been working with me for a while, and you know that I could use a team because I'm really good at calling and reaching out to all of you guys, and then I'm really good at calling and reaching out to you guys again and not doing the follow-up part. So luckily, we have Jennifer Shields now as our Chief Organizational Officer. She does an incredible job of keeping everybody informed and heck, doing all the stuff that I find really hard to do and she loves to do. So she's been a great addition to the team. She's been with me for about 2 years now, and she's been full-time for over a year. And I think any of you who have been working with me for a long period of time know how much she has increased our productivity and the level of service that we are able to give you guys. Matt Willis joined us about 9 months ago from Willis Auto. Many of you know who Matt Willis is or know of Matt Willis. He's got a great energy. You can see from the way he's speaking at this, he loves talking in front of people. He's a great MC. He does a lot of other stuff around the city that's very helpful, but he's been a great addition to the team and brought in a great group of clients himself. Colby Dawes is our client relationships manager. He came to us from Lincoln Savings Bank, where he was a commercial lender, and he knows a lot about the commercial world and commercial development. And again, he's brought another group of clients to ET Capital Partners that has been a great addition. And again, I can't express how much I enjoy having those guys in the office. And me being a social person, it's a lot better than me sitting by myself all the time. And I'm not going as crazy as I was. I'm still going crazy, of course. But and then we also have a group of independent contractors that sell for us in some other cities. We've got a couple in Des Moines that do a little bit of business, but we've got some in Arizona, Colorado, Florida, and those guys have been immense help to us. So if any of you guys are working with any of those independent contractors, tell them how much we appreciate them. So Lindsay McAndrew is a business support specialist, and anybody who has a self-directed IRA knows she's been a great help to getting that stuff done. Self-directed IRAs are a great way to participate. We'll talk about that later. Ava Torgerson, I mean, what can't that girl do? I mean, she can do everything in the world. I mean, she's incredible. We're lucky to have her on our team. She just graduated from Iowa. So if any of you want a real go-getter and somebody who would like a wonderful full-time job, she's available. I would love her to stay at our company, but she needs to go out and experience the world before she ends up working for ET Capital Partners for the rest of her life. She did graduate from the College of Tippie at Iowa. So Yeah. So if anybody needs somebody, please feel free to let me know. And then Jared Shields is our newest addition, and he is Jennifer's husband, and he has a client relations background, and he's going to be doing a lot of reaching out to you guys. We've just grown so much. We're up to over 275 clients in the ET Capital Partners group. So it's just not time for us to get out to everybody all of the time. So Jared's going to really help with that. And as much as I love talking to all of you, I need some help. So he's going to be providing that. So you may be hearing from him very soon. That is pretty much everything I have to say about our team right now. Matt is going to talk to you a little bit about what we have to offer.
This slide's great because it basically just tells you that ET Capital Partners is a one-stop shop for all things private equity related. So if you're confused about, okay, you're talking about self-directed IRAs or a 401k or a 1031 exchange, anything in between, even cash, check, whatever I'm going to do from an investing standpoint, participation standpoint, we do everything from the start line to the finish line and everything in between. And so, as Eric mentioned, having seven full-time staff members involved in the team is very necessary today with all the things that are in between that start line and the finish line. So don't be concerned about how to make all of those things happen, because our team will be right there with you, holding your hand along the way until we get you what you're looking for in private equity. So, thank you for that. And we're going to move on to talk about one of the more important parts of our business, which is our partners that we work with.
None of this would be possible at ET Capital Partners if we didn't have good partners to work with. We have some incredible partners. We've got Nelson Construction, Archstone, Conlin Birchwood, Ignite Cutler Development. One that didn't get put on here was Paws and Pints, that maybe a lot of you in Des Moines have been to, where you can bring your dogs and it's a drink and dinner and bar place, and you don't have to keep your dog right next to you. They have people who watch your dogs for you. Ridgeview is a great, there's going to be a couple more projects from them. That's a great housing development. Heritage Equity and Go Local. So we've had great luck with those guys. We do have two financial relations analysts that are independent contractors for ETCP. We run all of our projects by both of them before we put them out to our clients. And they give us a preliminary review of the projections and ensure that we're providing quality projects. And we really owe a lot to them because they've done a great job of that. Our participants are always able, and prospective participants, you don't have to be a client yet. You can sign up for our portal and you can go in and look at any of our projects on our portal. And they also include all of the documentation so you know all of the particulars about that project. I'd like to move on to some of our partner offerings and just give you a quick rundown of what's available out there. The first project I'd like to mention is from the development group Switch. And Switch is actually the development arm of Conlin Construction. Many of you may know who Conlin Construction is because they do a ton of construction projects around the state of Iowa and the Midwest. They're doing a lot of the projects over in the Keytown Loop area over by Waukee. They also, if any of you guys go to the Iowa football games and you're frustrated because the parking lot got all jacked up and you can't do your tailgating where you used to, Conlin is building that parking garage that's going to be there now. So you can blame, well, that's still Iowa's fault. That's the University of Iowa's fault, not Conlin's. So next, Matt's going to introduce a couple other of our partners to us.
Archstone is a great partner of ours. They've brought on a lot of new projects our way over the last year, and they bring on great returns. They're a younger group of individuals that seem to be an up-and-coming business. They have a couple industrial suite opportunities. One's going to be right by the Des Moines Airport, literally right across the street from it. They've just closed on that property, and they'll be building industrial suites there. Alongside that, they'll be doing the exact same thing over in the Quad Cities near the airport. So that's a project that they're going to combine those two opportunities into one, and they're looking for a little bit over $1.5 to $2 million for that. There's a flooring company opportunity, and then Archstone really started out as a multifamily project. project team, and great opportunities there. So again, Eric just mentioned it. If you go onto our portal, you'll be able to see all the opportunities that Archstone has available right now. And next, Nelson Construction. We've been doing business with them for all the time Eric has had this business going, so over 5 years. They've been in business for over 20 years here in Des Moines locally. They're a group that you can meet with individually with one of us and ask them all the questions you'd like, but they've been doing it for a long time. They have senior care opportunities, mixed use opportunities. A lot of these are local. They go out of state, at times, but most of it's local. And then they just bought 2 addiction treatment centers, one in Minneapolis or Minnesota and one in Iowa. And so there's 2 opportunities there. And they do have a little bit of multifamily that they've been doing over the years. So great opportunities. And as you can see, of the raise needed, Nelson would definitely have the most raise needed in the projects that they have available to them. So reach out to us with any of these developers, and we'll get you some advice on which way might be the right way to go. Colby is going to speak to Ignite and Birchwood.
Yeah, thanks, Matt. Yeah, Ignite Johnston project is a new project for them. They have a current facility in Grimes. They're looking to expand to Johnston, which, if you're familiar with the area, it's kind of in the heart of the Des Moines metro area. They're building a 220,000 square foot on 20 acres. It's a sports wellness facility that Ignite's going to host regional, national sporting events for multiple sports: basketball, volleyball, wrestling, track, and many sports beyond that. So that's a great project. That's kind of a 3 to 5 year project that we have offered right now. Next one, Birchwood Healthcare Partners. That's kind of a new offering that we have, different from some of the others, as opposed to just a single project. It's actually a fund. Their strategy of the fund is to acquire senior living facilities in multiple states. And so if someone was looking to participate in that, we can get you more details. But basically, you're putting money into a fund. It can be anywhere from a shorter term, 3-year participation up to potentially 10 years if you're interested in a longer term fund. So if you're interested in something like that or anything, just we can get you more info on that. But that's a new offering that we have. I'm going to pass it back to Eric here.
So one of the main questions we get asked is, how can we participate in these projects? A lot of people think the only way, they're like, well, I just don't have the cash available. I'm not that liquid. So obviously cash, is always a great way to get invested. If you have, funds sitting in a money market account or something right now, and you're making 4 or 5%, that's pretty good. But we've got projects that are set up to make you 17.5% that are 2 years long, and opportunities like that. So I think we have some really good ways you could use that cash that will work out better for you. But some of the real interesting areas are self-directed IRAs. I don't know how many people know what a self-directed IRA is, but if you have a 401k or an IRA, any retirement funds like that, you can roll them over into a self-directed IRA. It's the same thing as changing your money from one IRA account to another IRA account. So there's no tax consequences. You get the same tax opportunities you would get in an IRA, but you can invest those monies in a project that ETCP has, and you will be able to get, on some of these, I've got people who are making over 20% return and not paying any taxes on that. So that grows incredibly quickly if you get to keep doing that every year. So those are a couple of the ways. Self-directed IRAs. If anybody has IRA money out there and you're not making 15% on it, I'd love to talk to you about how we might be able to help make that happen. Next, I'd like to have Colby talk to you a little bit about a 1031 exchange and LLCs.
Yeah, So just a couple things, just 2 points I wanted to hit on the LLC investing. Investing through an LLC, it may provide some helpful tax benefits, shelter some income through there as opposed to participating individually. We are not tax advisors, but obviously we can get you in touch with somebody that would consult with you on that and make sure that which way to participate would be the best way. Another thing that we do with LLCs, benefit we have is some of our partners will offer some higher returns on their projects. If it's in a larger bundle or a larger investment. So we will sometimes match you up with other participants and put you in, whether it be an individual or an LLC. We could bundle you into a new LLC to participate in a project, and that would get you the highest return that we can get you. So that's a couple points on that. And then on 1031 exchange, if anybody has proceeds from a property sale that they have, as opposed to taking the capital gains hit on that, we do have some partners that will allow you to do a 1031 exchange into their project. There's some, we have some attorneys that would help do that. You have to technically be on the title of the project for that to occur, but we can help with that. And so if you're out there and you have some 1031 money, can't find a property to put it into, we have some projects that would allow that. So I'm going to pass it here to Matt to talk about the other ways to participate.
One unique way to participate in private equity is to take a loan out against your life insurance policy. And this is something I've done personally. And so I can speak to it a little bit. I'm no life insurance specialist whatsoever or tax specialist. But one way of doing that is to reach out to your life insurance company and ask them what type of dollars may be available on loan from your life insurance policy. And for example, you may have a loan out to yourself for 6%. And so you're charging yourself 6% interest on your money while your life insurance policy is still intact. And along the way, your 6% you're paying yourself or charging yourself, you're also gaining 15 to 20%, like Eric said, on your money while you're taking that loan out for yourself against yourself. So very more interesting information on that. But I would highly advise you to reach out to your life insurance company and ask them on that if that's something of interest. But I could speak to it personally on how mine played out. And looking at the numbers, it makes a lot of sense. We're going to next go into the main section for Connect the Dots, which is questions and answers. And so Jen's going to kind of take the floor as far as hand raisers. I'm sure that many of you are on here because you have questions. And just for the fun of it, and because it's on this slide, we are, just for the fun of it, going to do a little drawing for a 65-inch TV. So someone that's on this call, Colby Dawes has a jar with all of your names in it, and someone's going to win that at the end of this call. So looking forward to hearing the questions. Eric's going to probably take the floor with most of the answers, unless one of the others to take the call or take the question. But let's start out with the first question. Who has questions for us?
Hi, guys. So Eric, how do you guys make money on these transactions?
We're not paid by you guys. We're paid just by the developers. So whatever, that's one of the nice things about private equity and about our projects are, if you invest in, or if you participate in one of our projects, if you put 100,000, if you give the developer a check for $100,000, you're getting $100,000 investment. There's not a 1% fee to you or anything like that. It's just you get what you pay for.
What are the typical investment sizes?
The minimums are typically $50,000 to get started. Every once in a while, we have, if they're a promissory note, if one of the projects is a promissory note, those are where we have a little more flexibility. And sometimes we can go down to lower amounts on those because those don't have a written up private placement memorandum that says this is what they have to be within a range of. So if it's something, you know, if somebody wants to get started and they're a little scared and they want to try to get started at like 25,000, we can do some of that in those situations. I'm always willing to listen if somebody wants to ask about it. We'll see if it makes sense. Thanks for the questions, Carrie.
You're already on.
Oh, I'm on?
Yeah.
Oh, hi. You can put my video on if you want, dear. Anyway, I had a question, Eric, and you guys, I got a little bit interrupted by something when you were going over the 1031, so I hope I'm not missing something that you already went over. But so you do have possibilities for exchanging real estate properties?
Yes, we do. Yeah.
Okay.
So we actually have a couple that are coming up very soon. There's a couple apartment complexes that are going to be what they call value added, and they're done by the Archstone Group. And I know on those projects, when they're starting them, if you get in at the beginning, it's very easy to have you added to title and able to do it as a 1031 exchange. But it's much easier to do when a project's getting started than if we've already started it and try to do it in the middle of it.
What if you have debt on your properties? Because I know that then the one that you exchange to also has to have debt. Do you guys have any like that?
Oh yeah, they're always going to have debt. I mean, all of the projects, you know, that's a good question. That actually leads to a question we get a lot. You know, people are like, why do these developers come to you guys and, you know, pay such a high return when there's banks that they can get loans from for much less? And all of my projects they're always getting as much as they can from a bank first. So, you know, on a Nelson Senior Care project that's $75 million, they're going to get 80% from the bank because they have a good reputation with the bank. And now it might be down to 75 just because all banks are doing things different. But let's take it from an 80% idea, loan to cost. So if they've got a $75 million project, they need to put 20% down. That means they need 15 million of it themselves. And so they'll put 2 to 3 million of it themselves. And then they ask us to go raise the other 12 to 13 million. And so.
And how much are they putting up themselves?
They'll put up usually 2 to 3 million. It just kind of depends on the project.
So like what percentage would that be?
I mean,
Yep.
They don't put a real large percentage in there. They probably, you know, let's say we have to raise 15 million, they'll probably put in of the capital needed, they'll put in 10 to 20%.
Okay.
Yeah.
So they have some skin in the game.
Oh yeah, absolutely. Yeah. I mean, Mike never gets paid. The way Nelson sets up their projects, they never get paid any of their developer fee or anything until the end of the project. So they always leave it in the project until it's completely done.
Okay. And then are these projects, they're not buying and holding them, they're selling them?
They may buy and hold them, but if they do, they're going to refinance it and get cash out and pay you guys off as quickly as they can. So
Okay.
typically these projects are, you know, they're waiting till they get 85% occupancy, you know, like if it's a Archstone project where it's a value add, they're rehabbing all the apartments in the place. And when they get it all redone and they've got it at 85% filled occupancy, then they can refinance it. Like Archstone wants to keep all of their projects. Their main goal is to keep them and manage them. Of course, if somebody offers them a really, you know, if somebody says, you know, they've got a project that they think is worth $30 million and somebody offers them $32 million, they're going to sell it.
Right.
But they're, you know, same with Nelson. Nelson manages a lot of their projects. But again, if they can sell it for an amount that they think is worth it, they're going to sell it.
Okay. So if we want to find out about upcoming 1031s, they're on the portal? Are they listed?
1031 opportunity. No, you would want to let me know you've got some money that's going to be coming available, and then I could have a discussion with you about what projects we have coming up that you could use it on.
Okay.
Yeah.
Thanks.
Sure. Thank you. Any other questions?
Do you want to talk a little bit about the difference between like promissory notes and subscription agreements?
Yeah, I could do that. Would anybody like to hear about that difference? Is that all right?
Yeah.
Okay, we got one yes, so that's good enough. Promissory notes, the nice thing about promissory notes is they do have a end date. So when you do a participation through a promissory note, it's going to be an 18-month, a 24-month, a 3-year. It will have a term. And when that term ends, they have to pay you back, or else there's penalties that are incurred, and they will have to pay those penalties also. So typically they pay them back on time. When it's a promissory note, typically it's not on. Nelson offers a lot of promissory notes. We've got a few available right now, and they can be as short as a 6-month promissory note, and they've done them as long as 24 months. And when they do those, they're saying, hey, whatever their interest rate is, it's 12% typically. They pay it current every quarter, and they'll say it's a 18-month term, and maybe they have a 6-month extension available to them. So the max it could run is 24 months. When that 24 months ends, they have to pay you back. All right. On subscription agreements are open-ended agreements. And they may say, they may have a projected term of 2 years or 4 years or whatever it is. That is a projected term. So they're not going to be paying you back on that one until they've either refinanced it or sold it and gotten the cash to be able to pay everybody off. So when they say it's a 2-year term, that's projected. It could be 3 years, it could be 4 years. It all depends. And so that's what your questions should center around on those kinds of projects, is what could cause this to not be done in the term that they say it is. And, that's the things you should be looking for. So hopefully that helps everybody with the promissory note and subscription agreement. And Alan, maybe you had a question. I saw you unmuted yourself, and then I started talking right after I saw that. So I'm sorry about that. If you have a question, please feel free to ask.
No, I'm good now, Eric. Thank you.
Okay. All right. Anyone else
Hey,
have any questions?
Yeah, quick question real quick. This is Josh Briggs.
Hey, Josh.
Do you guys have a custodian that you typically partner with on the IRA option?
Yeah, we do. We've got a partner, they're Provident Trust, and we've had really good luck with them. The one really nice thing about that is, like I said, Lindsay McAndrew is our specialist on that. They have a third-party portal that they allow us to help our clients with. So when you sign up for them as your custodian, you can choose us to be a third party that can work on your account. And so when we do that, we can set the whole thing up, and then all we have to do is, all we need from you is a driver's license, your social security number, and a statement from the IRA or 401k that you want to transfer the money out of. And one thing I should make clear is, if you do want to do like a self-directed IRA, if you have a $500,000 IRA that you're want to get some money out of and use, you don't have to transfer the whole 500,000. You could transfer, for a first project, you could transfer 50,000 and get started. And so we can do all of that for you. And then you'll get a prompt via email through their portal that says, click here and log in and see what they've done for you. And you can see, okay, they've asked to have $50,000 transferred from this account, and then you okay it. So it makes life a lot simpler. If anybody's ever worked with a self-directed IRA, it's not the simplest simplest thing to do in the world. So it's nice that we have the group to be able to help out. We've worked with probably almost 10 different self-directed IRA companies. And I think Jennifer and Lindsay, if she were on the call, they could tell you that Provident is, because they're the only ones we know that has the third-party portal, and they make it very easy to handle your business for you. And the other nice thing about that, if you have money in an IRA, I just was looking at setting up a 401k plan for my company. and that company that I was going to set it up with wants to charge me 3 points for all of that. And so if you look at your IRA that you're doing and see what you're being charged by your custodian there, Provident Trust only charges $395 a year. And if you, whether you have $50,000 in that account or I've got one client who has almost 5 million in their account now. And, he's also a really good, if anybody would like to talk to him about how that's worked for him, I could give you his name if you wanted to know about self-directed IRAs. I believe he's on the call, but he might not have been able to make it today. But he'd be happy to tell you about how he's done so well with his self-directed IRA. And, you know, I love doing those kinds, because when you see that 15%, even the 12% coming in tax-free, that grows incredibly quickly.
Awesome. Thank you. One more question. So when you guys go through your due diligence process on a project, what are kind of the fundamentals that you're looking at to take on a project or maybe pass on one?
Well, I mean, first of all, I mean, just today, I think I sent 3 projects today over to, I have 2 different independent contractors that look at the projects for me, because I could look at them, but it takes me forever, and I'm ADD and I can't concentrate that long. So it's a lot easier to have these guys do it for me. One of them worked for Wells Fargo and was an executive vice president in charge of business development over there. So he knows a lot about this stuff. And the other one's a younger guy who's getting started. So I always send them to him first for a quick review. And then if he likes it, then I'll send it on to the other guy who's incredibly expensive to review. And so we try to look at, you know, I mean, location, you know, I like to see that, you know, they've got a good plan of how they want to carry forward and what's the exit strategy, because I've had several people come to me with projects and they really don't have an exit strategy. They want to keep using the money. And then when the money comes in, they'll buy another hotel, you know, get another project going. And they don't, you know, I've got one like that it was the first project that I represented, and they've taken some of the money that it's done and they're building new units around it instead of returning it to my clients. And you know, I'm not going to allow that to ever happen again. They're still going to make more money because of that, but it's just delaying them getting their money back. And that's just not exactly what we sign up for when we do this. You know, you guys aren't signing up for, here's a check that you can use unlimited. So that's the exit strategy is probably one of the most important things.
Eric or Matt, could you speak just a little bit more to the loan against the life insurance, or maybe even just help guide on what are some questions we should ask the life insurance agents to get that started?
Yeah, Matt can help you with that one.
Yeah, and I'm no expert in this, but I've done it a couple of times now where my custodian is Northwestern Mutual, and I guess I'll just put it out there that they're the group I work with, and went to them and sat down and had my annual review, and they mentioned, you know, at any point in time you're looking to make an investment, you can't take a loan out on these dollars. Your policy is going to stay intact, but you'll end up charging yourself interest on that loan. So if you want to take $100,000 and put it into a Nelson project, for example, we can get a check cut to you for this $100,000. You're going to annually pay 6% on that money. Don't know what it is today, but it's probably in that 6 to 7% would be my guess today. And so annually you'll get a statement from Northwestern Mutual saying you owe 7% on that $100,000. So you'll make that payment annually, but that $100,000 is now in a project making 12%. And so you kind of have to look at the, you know, weigh the pros and the cons of it. And at the end of the day, you're still going to come out ahead. And so I've been very much into playing that situation the best I can when it's available. And then at any point in time, I mean, the way I'm looking at it is with those returns that I'll get on that Nelson deal, I'll just continue to pay off the loan that I had taken and keep that investment going with the Nelson project or whatever project you're looking for. But for example, today that Archstone project that's about to take place and we're raising funds on, it's a 20% 20% return for 12 months. And so if you can make 12% over the next 12 months, let's say you put that $100,000 in with Archstone today, you're going to start making 20%, and they're going to pay that out monthly. It's the first time I've seen that where they're going to pay monthly dividends. That's going to work out really well in your favor. So I think the first question is to ask your life insurance company, how much money can I loan on my policy? And I think you'll be surprised at how much it is. It was much more substantial than what I thought, but very advantageous way. And the one I would definitely be curious of is ask your tax representative, but at least the way I was informed, and I don't want to share this as a fact, but I was informed that you can write off the interest you charge yourself throughout that period of time. I have had somebody question me on that through ET Capital that is not the case. And so I just make sure you check with your tax representative on it. But mine has said that you can write off the interest you charge yourself throughout the year, which is a nice advantage as well.
Thank you.
Thanks for the question. Please ask any questions. That's why we're here. I think there have been some really good ones. And we can also wrap this up if everyone's done with questions. Any other hand raisers, Jen, that you see?
Sounds like we're good.
Uh-oh,
The drum roll, Colby.
Colby's going to be doing a drawing.
that's what we all came for, folks.
Colby.
We're going to be pulling the name out of here, out of the official monster box. So
They make them purple just for ET Capital Partners.
must be on the call to win this too. So I know we had some that signed up and didn't make it. So we're going to draw a name until we get somebody here. Got one here.
Eric Torgerson?
I got Bob Burke. Is he on?
No, you did not.
Yay! Yay for me.
It's rigged.
So
No doubt.
congratulations, Bob.
Bob is Eric's father-in-law.
He's a
But
client.
he is a client, and he is on the call.
Yeah.
Well,
Oh,
you didn't
boy.
buy him
Well,
a
that's the way
printer
it
this
goes. I
time. You
was
bought him a
afraid that could
TV.
happen. God dang it.
Can you ship it to Arizona?
We'll get it taken care of. Well, hey, if there's anybody else who has a last question or needs anything, feel free to speak up now. Otherwise, you're welcome to go free and do whatever else you have planned for your Tuesday afternoon.
Thank you.
Thank you all
Thank
so
This
much.
is great. Thank you.
Thanks everyone for participating. We appreciate your time.
Thank you.
Thank you.
Thanks, bye.
Bye.
Oh my,
How did you do that? Thanks.
Bobby Burke, you lucky dog.